All right. Got a little busy with school and everything else, but now we're all caught up, and everybody's probably wondering, how do I actually grow this $50 into $1,000? Well, I'm going to teach you guys with very two simple things. You're not going to understand this right now, but you're going to learn what supply and demand is and how to buy low, sell high in an intro to trading the right setups. So right now we're going to focus on upside trades, and we're just going to break down each one of these trades. If you go to the before and after section, you will see these screenshots. These screenshots are there for a reason, right? So right here, like I said, the green candles indicate upside move, and then these black candles indicate a downside move. Right here, we see a strong push to the upside. We see a trade down, and then we see a swing up. We see another trade down, and we see another strong move past this high right here. Pay very close attention to that vocabulary. We see a very strong move past this high. How do I know this is a strong move? Look at the green candles right here compared to how big these green candles are, right? Even these two green candles right here, right? All of these big green candles indicate a lot of buy momentum in the market. But if that buying momentum comes into the market and if that buying momentum happens, there needs to be a sell off so that way there can be more contracts to take price higher, right? You can't just keep on pushing price higher and higher and higher. You have to exchange those contracts to someone else so that way they can buy into the market and then they can also get in on the trade. And so right here, we're focused on this black candle right here. You're going to see me refer to the black candle before that strong upside move as an order block. So always remember that that downside candle, that's the lowest candle before that strong upside move is an order block. So we see price trade down into that order block down here. And there's a smaller order block on a smaller time frame. That's why this zone is smaller, but the same principle still applies. We're buying at a lower price than if we would have bought calls up here, right? So that way, if price does bounce, we're going to make more money on a stronger move than if we just anticipated a breakout. Because people with lots of money are entering off of the sell-offs and then a stronger bounce. And if you look in at the next screenshot, we see that strong bounce right here. And these trades are going to take place most likely at 8:30 in the morning. That's when all the momentum comes in. And so we want to be at our computers looking for these setups. And if we don't see them, then we're not doing anything. The next screenshot is very similar. All right, we see a consolidation. A consolidation just means price is moving flat. You don't see price really breaking up to the upside or going down to the downside until right about here, right? So we see a consolidation, a move to the downside. What do we see? Another consolidation, and then a move to the upside, right? And then we see a trade down, come up, trade down, another strong move to the upside, right? So notice that every single one of these strong moves to the upside, look at how big these green candles are. Look at how big this green candle is. And it breaks this high and it breaks this high. Same with these green candles right here. They break this high. So what I'm looking for is I'm looking to buy low off of this upside move. So that way when price comes down here to these zones, notice this order block right here. I'm looking to enter off that order block and buy calls as soon as it gets down here. And as you can see, price plays around a little bit in this zone, and then we see that bounce to the upside. Now, notice that price plays around quite a bit. This is a 30-minute chart, right? You always want to be paying attention to the time frames. So each one of these represents 30 minutes. Now, the reason that this took so long to develop is because it wasn't right at 8:30 in the morning, right? But when you do have that 8:30 in the morning trade, you will have that quicker return and then that quick snap. And that's that quick snap as soon as it touches the zone is what we're looking to trade. Same thing right here. We see a move to the downside, a wick up, move to the downside, wick up. We see a candles go to the upside, a little move to the downside. We see a little bounce, and then we see a break past this high and this high. What are we looking to do? We're looking to buy low from that upside move. We're looking to buy low right here. So we're going to enter calls once it hits this gray area to the upside. And as you can see, when price taps into this, We see this green candle form, we enter calls, and then it has another move past this high. And then you can see it just keeps running higher. So this is the intro to how to buy calls, how to identify when the market is going up. And the next thing we're going to do is identify when the market is going down and when you should buy puts.